tremendous. And I know that if I were you, I'd be saying, what do I need any of this? And I will come back and say that even the most bearish of the strategists is saying down 30% from the highs, which as of this very morning, because of this, is down 7%. So we're closer to a bottom than a top. But Jeff, I have to tell you, there are two things that caused this. One is we did not get the break in the producer price index that you would think, given the fact that oil's come down, given the fact that real estate has come down, given the fact that many of the inputs like raw commodities have come down. You didn't get the soft PPI. And then you had a headline from JP Morgan, which basically just said, hey, listen, batten down the hatches. The hurricane could be coming. The actual conference call was much more bullish, but very few people listened to that.
Yeah, and then, of course, yesterday, the CPI number, now we're increasing the probability of a full 100 basis point.
Which we've been calling for, but now everybody's on it.
Right, but when you go from 75 to 100, it just means the economy might slow down a little bit more. So we're seeing some weakness today. JP Morgan earnings, numbers have been coming down, but I guess not enough. Kind of the same deal with Morgan Stanley, who did report. It was kind of what we knew what was going to happen with Morgan Stanley, with IB, investment banking down. But I thought wealth management kind of looked resilient, though.
Now, let's talk about this. Okay, so right here, January, okay? Right here, we know the Fed's going to tighten. So what people are thinking is, wow, you know what? Business is going to be good, but we're going to get a net interest margin that's higher. So remember, they're paying you 25 cents on your account, and they're going to be able to invest at the Fed funds rate or more at 2%. So you look at how much money they're going to make, and that's what happens. Then we start realizing, wait a second, maybe we're going to go into a recession. So then we start thinking loan losses are going to offset whatever gains we have on the Fed funds rate. And so now we panic and we take it down. One or the other. You can't get both. And I would tell you this. The lending is going to be better than people think. And the losses won't be that bad. But the economy is going to be weaker. So I think that this is the price that I think you would pay for that situation. Not 107. But the company itself is not telling you a good story versus Morgan Stanley, where the story is much different and much better. Very different.
So JP Morgan, they suspended their buybacks today. Morgan Stanley, remember, they have that $20 billion program in place, and they have a lot of cushion with their capital reserve ratio, so they have that flexibility to do the buyback. I mean, with the buyback coupled with the 4% dividend that you're getting off that recent hike, that buyback could reduce share count perhaps by 6%. Right. You're getting a pretty decent return right off the bat. That's kind of how we're viewing it. We're waiting for sort of the investment banking environment to
come back.
Right,
but we didn't trade this. Equity. That was obviously a rule. We didn't. We're not a hedge fund. We didn't trade this. We have bought it down. Now, right here, it yields almost 4. Okay, let's call 4.
Yeah, I think with the new hike,
and buying back stock. Yeah. Now, one of the things you have to recognize is that JP Morgan said at the very beginning, we're not buying back stock.
Right.
Gorman's telling a very different story. And one of the reasons is Gorman is much more of a wealth management situation. Wealth management situation already down 25%. Okay, so you're talking about recession levels, and yet they have very little actual risk to the economy. I think that's a buy, but like many of the stocks that we talk about, we have bought these stocks down here. We can't just keep buying them here. That's not our style. We don't buy until we get a meaningful decline from our last buy. And when I look over our portfolio, there really wasn't much that fit that.
Yeah, I think that's the right way to put it, for sure.
Disney does, but Disney, we're waiting. Yeah, we have to see what Disney's doing.
Morgan Stanley, we should also point out, too, a $200 million, really disappointing to see this impact from regulatory matter concerning the use of unapproved personal devices and some record keeping. I mean, look, it's a little bit of a black mark. You strip that out, the numbers would actually look a little bit better.
Yeah, see, no, I would have said, let's write that down because I think it's important. This was what disturbed me. A $200 million hit that looks like to be from unauthorized phones from home. Now, that is just dead weight loss. And so when I saw that, I truly did not like Morgan Stanley as much as I did yesterday. Mm-hmm. That does not mean we're going to bail. I am saying that the upside for Morgan Stanley has been that they have Mr. Clean, and they ain't no Mr. Clean anymore. So you can expect that the multiple turns, what we pay for the earnings, won't be as much.
Yeah, and then just also want to point out too, trading revenue very strong, so that's obviously helping. And wealth management division, the revenues were down 6%. That's really just because lower asset values, the market is down.
Right.
They're going to generate less fees, but the margin on the wealth management side, the margins there were actually pretty solid. So that's good to see.
Yeah, I think this one, I gave you what I felt JP Morgan. I think this one can trade higher, but we do need to see some break in this inversion. Right now, people are looking and seeing that the short rates are above the long rates. Yes. That's signifying that maybe the Fed's going to raise 100 basis points. If you can raise 100 basis points and not have loan losses, which is, I think, what Morgan Stanley could have, you'd pay 110 for that. So I know that people are very discouraged. I know the market is just a nightmare, but I think we have to take them piece by piece. Morgan Stanley is better than JP Morgan.
Mm-hmm. And Jim, it's a down day, but there were actually a couple of bullish analyst calls that I think we should highlight. First one was AMD, an upgrade from BMO Capital. They take their price target up to 115 from 100, even though they reduced estimates. They actually raised.
And also we know that Intel is raising prices. We had heard, by the way, that Intel was cutting prices. Now that turns out to be reverse Intel's gain. Intel is raising price. Here's what I have to say. If you think there is any hope, and of course we're not here all day, but we will be writing bulletins. If you think there's any hope that the market can rally, of which right now I'm not so sure, but if you think because it's still not oversold enough, then this is the one to buy because you have earnings going higher and you have the stock down 46 in a market where the average stock's down 21 from the high. Now, one of the things that is happening, I'm speaking to Jeff beforehand, is that where from the high doesn't matter in this market. Why? Because, well, frankly, people feel that the high was much too elevated in every single case.
Sure, right. It's hard to look at where stocks were, 6 months a year ago, especially with interest rates, how they've moved so much higher. And everything was overinflated, a little bit too much froth in the system. But I do just want to highlight with AMD, the analysts point out that they say this is going to be a continued share gain story. That doesn't even require Intel to misexecute. Obviously, AMD has been a huge beneficiary of Intel stumbling with a couple of their different processes with their with the nanometer with one of their nodes, but they think it's AMD's architecture is just too good. They've been doing everything right. They're going to continue to pick up share from Intel. And they're saying server gains very true, close to 30% in 2025 from 15% today. So I think that's a very important part of the story.
At the same time, we're starting to see people worried about enterprise. They've been worried about consumer. What I felt most interesting about this, besides the AMD, was the upgrade for Qualcomm.
Yeah, added to the analyst focus list from JP Morgan. They had it on there before. They took it off in April. They're adding it back on today. Now, this is one of the rare semis that look at just based off the price today. It has.
We're going to make money
well
on
off its lows.
If you ask me which of the bet, look, I've been checking in with NVIDIA. Business is good. No one believes.
Yeah.
I had dinner with Lisa Su after their analyst meeting. Business is good. No one believes. I have had many extensive meetings and phone calls with Christian Amon. And remember, I don't get any. There's no insider information. I'm just getting the tenor of business. The Qualcomm tenor of business is very, very good, despite the fact that China's on lockdown. There are a series of events, whether it be the strong dollar, whether it be China lockdown, whether it be Russia, that made it so that the market is not fathomable. And I totally understand the sellers. But I do want to keep in mind that at the same time, we have had the inputs for inflation coming down pretty furiously here. Mm-hmm. And that is going to lead to numbers that are going to surprise after we get the 100 basis points increase at the end of the month. Unless we get a little less, but I would tell you that when we see next month's numbers, they're going to be lower. Now, I read my mentions columns this morning. Hey, guys, if you belong to the club and you're writing those miserable mentions, quit the club. We don't need you. Get out. Because I've got to tell you, our decision that this was the last bad inflation number that some of these people have been criticizing me on, I want to double down on that. I'm double downing with when all we need to see is an excess of chips. I do have Mary borrowing tonight for autos. And what I think is going to be is some really down numbers for housing. And that's it, guys. The trend's going to be broken. Fed does 100 basis points and then goes hold. that's explosive for the markets.
Well, you know, a company that's doing well, even in a slowdown, even if the economy is going strong, that's going to be Costco. And that was upgraded today by Deutsche Bank too. Pretty interesting. A lot of the stuff that we've been saying, just of how strong their membership program is, the renewal rates, the loyalty.
But also, I mean, let's not forget, ConAgra had numbers where they couldn't keep up with inflation. Chicken, 60% increase. Costco is its own chicken factory.
Yes.
You know,
yes,
Costco, whatever.
They pride themselves on that.
Because Rich
Everything
Galanty,
they do, they pride themselves on.
Right. Well, Rich Galanty, the CFO, has figured out they're an inflationary place. In other words, they're set for inflation. Hence why it's only down 12 and why I think it finishes the year higher. Costco, one of my absolute favorites in the portfolio. STZ, one of my absolute favorites. You know that I love Constellation because people drink more beer in a recession, which is just terrific. There's a lot of stocks that we bought that were defensive ever since we high graded, and those are working. And I do not think, by the way, that you should avoid oil because the oils that we're buying are about yield. And what we're going to see is a decline in long-term yield. So the oils are a great place to be, even as oil's now down to 91. I'm scrutinizing all of them. I think that when they finally really if they go below our bases, we will buy more. So I'm Jim Cramer with Jeff Marks. Tomorrow, I'm trying to figure out how to be able to do a show. I don't know because I may have to be able to do. There's a series of things on Fridays that are going to be difficult. But I will tell you, on Monday, I'm coming from a new set, and
I'm excited for it.
Yeah, and we'll be doing just like the other day when we did a special bulletin at the end of the day. We're going to be doing special bulletins. We're going to be writing a lot more about what we're saying on the website. If you do miss the morning meeting, and we're just constantly putting in new things, but I do want your input. Jeff and I want to know, do you want to take a trip? Do you want to cruise? Do you want to have a lottery ticket to be able to come see the show? Because we're finally going to be able to see the show Mad Money while it's made. So think about all those things. Give us your feedback. And as always, thank you very much for watching.